Stock market was wild today, and this comes at a time where there's huge trade deals with the Trump administration, with China, and also today with Saudi Arabia, and so much more. But today we are focusing on Coney. This is Yelmark's Coin Option Income Strategy ETF that writes synthetic cover call on Coin. Coin is a stock. Coinbase is a company that you can buy and sell your cryptocurrency. So there's a huge news happening with that company. And one of beneficiaries from that news, apart from Coinbase, the stock itself, was Coney, because this is an ETF that has exposure to that stock. As you can see here, it went up 84 cents, and that's 10.87%, so almost 11%. And after hours, they seem to be going up. This ETF has been lagging recently. A 52-week range is $6 to $24. So if you bought at $6, then you have gained over $2. That means you have profit. But if you bought at 24, that means your portfolio right now is down. But we're going to look, if you are to buy at that higher price and then you receive all distributions, how much your portfolio is going to be right now. Today's volume is close to 10,000, but on average is about 5,000 to 6,000. Net asset as of now is over 1 billion. Coney performance wasn't even close to the stock itself, which is Coin. It went up at 49.68. That's almost 24%. Range is between 142 to 349. Today's volume was 38,500 and average volume is around 9,000 to 10,000. Coinbase market cap is 65 billion. So it's a huge company. The main reason why Coinbase went up today is because it has joined the S&P 500. And whenever any company joins S&P 500, the stock usually surge, because this indicates that the company has matured enough to join the biggest 500 companies in the United States. And a lot of mutual funds and all these ETF will have to buy this because it is included in S&P 500. So this is a really good news for investors who are investing in Coney, or if you are thinking to buy Coney. Now let's look at the Coney performance since it was incepted, total return with the drip. So if you take all the distribution and reinvest, your portfolio now is over 100%, and that's annual return of 52%. If you didn't reap any of your distributions, then your portfolio it's only 88%, but annual rate of return is 45%. Share price is negative 56% and dividend increase is negative 46%. This means they paid high distribution to begin with, and recently they've been paying lower as compared to what they paid the first months when this ETF came out. This is a good lesson for anyone who is looking at the share price and say this ETF has NAV erosion. You always have to look at the NAV erosion in different perspective, because you have received a lot of distribution. So even though the stock was only 8.6 and it came out around $20, but if you take all the distribution you've received, your portfolio is over 100%. So that's how you look at these type of ETFs. If we come to official Yelmark's website, Coney yield is 109, and Coney performance since inception cumulative 82% NAV, and the ETF is 76.79%. That's annual return of 41 and 39%. Coney net asset as of now is 1.04 billion. Coney used to be one of the biggest Yelmark's ETFs when it comes to asset under management, but recently MSTY has overtaken Coney to be the number one ETF with a huge asset under management for Yelmark's ETFs. Now we know the performance and how much you have gained, whether you dripped or you just took your distribution and reinvest other ways. This is all distribution since inception, and on average you are getting $1.43, or total they've paid so far is $28.61. Now with the price of today at average distribution of $1.43, that's annual yield of 200%. We're going to use this yield to calculate how much it's going to take you if you invested only $1,000 without adding any amount of money in Coney to be a millionaire. First, let me show you this other income projection for 2025. This is for people who have lump sum today and they want to invest in this ETF and receive their distribution as of today. How much you're going to generate every month? If you invested $25,000 with the price of today, using average distribution yield of 200%, that's 4,172 per month, or 50,058 annual income. And if you put 50,000, you're going to receive 8,343 per month, and that's over 100,000 per year. If you invested 75,000, you're going to get 150, and that's 12,000 per month. If you invest 100,000, it's 16,000 to 100,000. If you invest 150, that's 25,000, 300,000. 200,000 is going to give you 33,000 per month, and that's 400,000 per year. We can go all the way down to, let's say, 500,000. That's going to give you 1 million annual dividends. That's a huge, and that's 83,431 per month. I wouldn't imagine anyone would be willing to invest 500,000 in just one ETF unless you have a lot of money. Now let's go to another calculation. This is for people who don't have much money. You just want to invest your $1,000 and let it grow, compounding for a few years, and see how long it's going to take you to be a millionaire. You're starting with $1,000 invested for the first year. We're assuming distribution stays the same of $1.43, and the yield would stay the same. You are not adding any money. You are not doing anything except reinvest all the distributions. First year, you are going to receive total dividend of $2,000. Within third year, your portfolio is going to be $6,000. Down to seventh year, your portfolio is $148. We go to 10th year, your portfolio is over $400,000 with just $1,000, and reinvest all the distribution. You haven't done anything else. 11th year, now you have $500,000. You know, it hasn't taken you that much, but the longer you go, the bigger the compounding, because after 11th year, it's not going to take you a long time. It's only going to take you very few years to be a millionaire. Now, within 13 years, your portfolio is closer to $1 million. 13 years, your portfolio will be $992, and you let that grow for one more year, then your portfolio, it will turn 1,280,000. So that's how you can invest only $1,000 and let it compounding with Connie, and your portfolio will turn into $1 million portfolio. Again, this calculation is based on the number that I just put on the spreadsheet I showed you earlier, that the price will stay the same. It does not go down and it doesn't go up. And all the distributions they are paying will be based on average. It doesn't have to be exactly a $1.43 every month, but on average, it has to stay at $1.43 or closer to that. If you don't want to miss any of these type of videos on income projection, on how to invest your money today and receive monthly or annual distributions, or if you don't have a lot of money and you want to invest only a little bit of money at $1,000 and let it grow to be $1 million portfolio, make sure you subscribe to this channel, because this channel I always give you those type of calculation and guidance. And if you find the value in this video, please smash the like button, and don't forget to share with someone who you think this video might help. Thank you very much for watching. That's all I have for today. I'll catch you in the next video. Bye bye.